Dear investors, in today's video I would like to talk about Ford Motor Company. I will shed some light on the valuation of the Ford Motor Company. So I will not introduce the company because most of you know the company, maybe some of you even drive a Ford car. So I just will focus on the valuation part. For valuation I use fast graph, and you can see the price. The current price is around 7 US dollar. The dividend yield is zero. Dividend is suspended. The company so far paid dividend, but due to this automotive and COVID situation, the dividend payment is suspended. So the growth rate is negative. It's not so good. The normal PE, this is the average PE in the last years, or basically all the years. So it's about 8.7, and then the default PE, which is calculated, the industry standard is 15. What uh, what fast graph using for orange line. But as you see, the Ford company mainly tracking the normal PE, which is the average of all-time PE. And this is not so nice years ahead of Ford Motor Company. You see the prediction that Ford Motor Company will not earn in the next years, or the earning will be negative, and after that you can expect some growth in EPS. The S&P credit rating is BB plus, and the long-term debt per capitalization is 58 percentage. I would like to show you my estimation. Basically, I take the numbers from the 10K report, annual 10K report of Ford Motor Company, the diluted number of shares, and also the total equity. And based on normal PE from FastGraph, this is higher. What I showed you at 8.73. I can modify this. Yeah, 8.73. This is correct, and 15, this is the normal standard 15p, which can be applied for most of the companies. And also I calculated the 10 years average EPS in this below chart. This is the 10 years average EPS, which is 0.274. And the growth rate of automotive industry is around 2% annually. I use this number for my calculation, and my expected return from this investment at least 5%. So based on these numbers, I could calculate every year the price of the company or the valuation based on normal PE. You see, this is much lower than the current price, and also based on the normal PE, or based on the 15 PE, the company is still expensive, and by 2040 the expected share price based on that it's $6 US. And also the DCF, the discounted cash flow calculation, uh, provided uh, provided uh, the number of around $4 US, which is also lower than the current price. However, based on the equity, total equity divided by diluted number of shares shows around $9 US. So it's definitely the company is not undervalued, or at least fairly valued. With these numbers, the DCF intrinsic value shows me that this is not a good buying opportunity. However, based on equity valuation shows a little higher number than $7. So for me, this company is not an investment right now. So maybe the price goes down or the situation change with Ford Motor Company, but definitely it's not the risk reward is not for me in the current situation. Thank you for listening, and I wish you a nice day.